Hey guys, Nate Hare here with Directed IRA and Directed Trust Company. Great to have you guys on another Directed IRA webinar. I've got a very special guest, somebody that we've worked with for many, many years. They're an expert in their field, and we love when we can bring experts in the field of specific alternative investments to talk about their side of what they're seeing in the market and just give you guys an opportunity to just learn more about different alternative investments without selling you anything, because that's one of the things we don't do at Directed IRA. We don't sell you guys investments, but we like to provide you good education so that you can make the best investment decisions for your retirement plan. Just some foundational things here. I do have a moderator, Ashley Villa. She's one of our IRA specialists in the chat. If you guys have any questions for myself or revolving self-directed IRAs or for Chris, make sure you put those questions in the Q&A box. We have a Q&A box and then we have a chat. Chat, you can go ahead and network, tell people where you're from, maybe say, hey, I'm so-and-so, I'm looking for these types of opportunities. Any networking, just keep that in the chat. But if you have a specific question that you'd like answered from us, keep that in the Q&A box so we can kind of keep those conversations a little bit separate. But Ashley is active in the chat, so ask as many questions as you want. She can probably answer 90% of the questions you guys have. Some quick announcements before I get into the topic itself. If you want to bring up the slides there, Angel. I got to remind people, we are within weeks of our biggest event of the year, and it's our Alternative Asset Investor Summit. Let me tell you a little bit about this event if you haven't heard about it. Once a year, we put on a two and a half day event that bring clients and investment sponsors together in the same room. Now, why do we do such an event? As a self-directed IRA company, the thing that we provide is the freedom to make your own investment decisions with your retirement plan. We call it, quote, a self-directed IRA. But when you come and bring your retirement account to Directed IRA, we don't have a list or a menu of investments to sell you. If you want to be sold investments, keep your IRA at Fidelity and Charles Schwab. They've got tons of things that they want to sell you. But if you want to invest in things like alternative investments, things like real estate, private lending, mineral rights, precious metals, cryptocurrency, those are investments that could be held in a self-directed IRA, but you have to tell us what the investment's going to be. So one of the ways that we kind of spur this on and get people at least interested or more knowledgeable about alternative investments and alternative investing is by putting on our two-day event called the Alt Asset Summit. We've got probably the best lineup of speakers we've ever put in the same room, in the same period of time. So we're going to have our CEO and tax attorney, Matt Sorensen. This is his event. This is his biggest event of the year. Tax attorney Mark Kohler. We're going to have investors like Pace Morby, tax strategists like Carlton Dennis. And we even have our title sponsor of the event is Troy Eckert and Eckert Enterprises, which we're going to talk a little bit about today, but they are our title sponsor and they'll also be presenting on stage at the event. So if you're interested in learning more about alternatives, seeing what types of investments are out there in the space, but also want the ability to network with other investors, this is where you find deal partners. This is where you find private lenders. This is an event that you do not want to miss, and we've got tickets on sale right now, but this is a limited seat only event. We only have enough room to fit 300 people, and we're getting pretty close to that number. So if you want to be there live, okay, scan that QR code that you see on the screen or go to altasset.com, and you can buy any ticket, okay, and get $100 off if you use the code NATE100. Now, I would suggest coming live. If you absolutely can't make it, you'll miss out on the networking, but the content is still valuable. I suggest getting the virtual ticket. But if you can in any way make it live, if you're in the areas, if you're in the Phoenix, Scottsdale area, you do not want to miss this event. And we have hundreds of people flying in for this event from states all across the country. So this is a can't miss event. Again, we only do it once a year. This is October 16th and 17th. It's going to be here in Scottsdale, Arizona at the Hilton Scottsdale Resort and Villas. It's going to be a great event. I hope I see you guys there, and I'll remind you about this at the end. So that's the one announcement that I have. And let's just jump into the content itself. And what I want to do is first talk about self-directed IRAs in general. The reason I do this, I know we have a lot of repeat listeners who have already heard this, but about 60% of our viewership is brand new people. So I know there's a lot of first timers in here. So let's just talk about retirement accounts, self-directed retirement accounts, and how these alternative assets or alternative investments fit inside of them. Okay. A little bit about my background. I actually came to find self-direction by accident. Right out of college, I was a real estate investor. I actually started as a realtor and a loan officer, and I always liked the numbers of real estate. And I worked in that industry for 8 years, and I also had a retirement plan. Now, for me, as I assume a lot of you might have been conditioned to think that your retirement plan was just supposed to be invested in stocks, bonds, and mutual funds. That's all I thought a retirement plan could invest in. Well, in 2012, I was recruited by a self-directed IRA company out of Houston, and my whole mind was blown realizing that retirement plans, whether it's 401ks, 403bs, TRS, TSPs, IRAs, they can own almost anything on the planet, including the things that I was knowledgeable about, which was real estate. So to this day, me personally, I make better returns in my retirement plans by investing in the things that I'm knowledgeable about, real estate, private lending, and so forth. So I've come to find great passion in teaching other people about how this works because I wish I knew how it worked 10 years prior to me even finding out that they existed. So that's kind of why I found passion in this industry. But one thing that I want to remind people is we are a self-directed IRA company. We manage retirement accounts, but like I said earlier, we do not sell investments. So everything we provide here on our Directed IRA webinar is for education purposes only. You do what you want with it, but we're not giving you guys tax, legal, or investment advice. I promise we'll give you enough information to be dangerous with, okay? But you need to make your investment decisions, and this is just for further education, just to help spur your decisions along. So if you're interested in, how come I've never heard about this? How come my advisor has never told me that I can invest in alternatives? And we'll talk about what alternatives really are. But how is it so that an IRA can own things off of Wall Street and actually own investments in Main Street? Well, ever since the mid-70s, when IRAs were created, they've always been able to own the same investments. You see, the IRS doesn't really care about what we own in our retirement plan. They only say we can't hold 2 investments inside of them. And those 2 investments are life insurance contracts and collectibles. On the tax code, there's only 2 restrictions: life insurance contracts and collectibles. So as a general rule of thumb, if you can hold title to an asset, the ownership of that asset could be your retirement plan. The ownership of that asset can be your traditional IRA, your Roth IRA, your solo 401k, even your health savings account. We'll talk about the different types of tax-exempt accounts that you can use to own alternatives. But this is not a new strategy to the rich and the wealthy. The rich and the wealthy have been owning alternative investments in their retirement plans since the mid-70s. But most people who have a retirement plan, they don't know that it is even possible. But the big thing is they don't have access to deals, right? So they just do the easy route, which is have a Fidelity IRA or Charles Schwab IRA and just buy their traditional publicly traded assets. There's nothing wrong with that. But when you look at the numbers, okay, and these are from actual IRS audits, when you look at the average American, okay, there's $45 trillion sitting in U.S. retirement plans. Only about 3% of that 45 trillion owns an alternative asset at all. Most people do not own one single alternative investment in their retirement plan. But when they audit the individuals that are valued above $1 million in net worth, the alternative assets in their retirement plans, 22% of their assets are alternatives. And when you keep going up the list, when you get to the ultra wealthy, $30 million and above net worth, almost 50% of their retirement assets are alternatives. That is not by accident. That's intentional. Okay. The rich and the wealthy have known that alternative investments, provided you're knowledgeable about them, can provide better returns, more stability, right? But most people just don't even know that it's even possible. So what we do at Directed IRA is we offer you the freedom of choice to invest in what you decide you want in your retirement plan. And if you look at the investments that we most commonly see in our clients' IRAs at Directed IRA, a lot of them you're probably familiar with right now. Maybe you own some rental property. Maybe you have some land. Those are investments that can be owned inside of a retirement plan completely tax-free. We have clients that buy precious metals, gold, silver bullion. We have people that buy cryptocurrency in their IRA. I'm not talking about a crypto ETF. I'm talking about actual ownership of Bitcoin, actual ownership of Ripple, Ethereum. Those investments can be owned inside of a retirement plan. And the beautiful part about a retirement plan is that a retirement plan is a tax-exempt trust. All your IRAs, 401ks, 403bs, they're exempt from taxes. So when you buy and sell investments within the plan pays no taxes. Everything is either tax deferred or tax free. So if you can understand how to put, I like to say, appreciating or cash flowing assets or both inside of a tax-free account, this is what the rich and the wealthy have been doing for decades. Okay? And this is why we like to provide this education to you guys about what's truly possible in a retirement plan. And one thing to mention is you guys can have as many retirement plans as you want. The IRS doesn't care if you have 30 different IRAs. And most of our clients do have an IRA at Fidelity or Charles Schwab that holds their traditional investments, but they also have an IRA here at Directed IRA that holds their alternatives. And today we're going to talk specifically about the alternative investments of energy and mineral rights here in just a second. Now, when you look at the types of plans that we have here at Directed IRA, these are the types of plans that you can set up here at Directed IRA that can own alternative investments. So that whole list that I showed you previously, all of those investments can be owned inside of a self-directed traditional IRA, a self-directed Roth, a self-directed SEP IRA if you're self-employed, a solo 401k, which is probably one of the greatest wealth building tools on the planet if you're a small business owner with no employees. We even have non-retirement plans that are tax exempt that can own alternatives like self-directed health savings accounts or self-directed educational savings accounts for your kids or your grandkids. Now, if you might have noticed, self-directed is just a marketing term. The same plans we have here at Directed IRA are no different than the plans that you have at Charles Schwab or Fidelity or Wells Fargo Advisors. Self-directed is just the marketing term that indicates you have to tell us the investments you want in these plans. But the plan itself is exactly the same. Now, you might ask yourself the question, well, how come Fidelity or Charles Schwab doesn't let me buy these alternative investments? For the most part, they don't make money on it. If they don't sell it and they don't get a commission on it, they don't allow you to hold it inside the retirement plan with them. It's not that they can't legally, it's just that they won't. So when you have an IRA set up with us, our account agreement with you as the client says we'll hold anything the IRS allows, but you got to tell us what the investment is. We'll show you how we buy it. Okay. We'll give you the forms to fill out to buy it, but you have to tell us what the investment is. So this is where we get stuck on the fence sometimes. This is why the majority of the people do not own an alternative investment inside of a retirement plan, is because they just don't know where they are. They don't know who to contact. They don't have access to deals themselves. They work a 9-to-5 job. But again, this is why we provide this education, is to show you guys, hey, there are people out there that have investment opportunities. It's up to you to do the due diligence on these opportunities and decide for yourself if you want it in the IRA or retirement plan. But now that we have the age of information and the internet, now more and more people are gravitating towards self-direction because they realize now they have the ability to find these investments. But this is an opportunity where we can bring an expert on in the field, and specifically in the field of mineral rights, which is a great investment opportunity. Very cool. It's one of the least little talked about real estate investments on the planet, but that's mineral rights. So, Chris, are you on with me? Let me introduce Chris here.
Yes, sir. I'm here. How are you doing today?
We're doing good. I can't see you. Is he on this? There he is. Look at that handsome devil.
Well,
okay. So let me just give let me give a little background about me and Chris and really me and Eckert Enterprises. So Eckert's been around for, I don't know, decades. Maybe you'll give the history on that. Um, in my opinion, again, I'm not endorsing, this is just my opinion. Eckert is probably the leading authority figure on mineral rights education and investment opportunities. They do a lot. They're active in the space. You see them at local RIA events. I was just at a local RIA event and they were there. There's no other mineral rights provider that's actually going out there and teaching people, yes, this is an opportunity. And I didn't even know this was an investment opportunity until I got into the self-directed space and saw so many clients diversifying their retirement plans into these mineral rights packages. And we had dinner back in Dallas, and you got time to share your experience. And I just thought it was so cool. And I'll let you kind of expand on it, how you started first as a passive investor in the mineral rights. And that led you to a career in it and just changed your whole world. So it kind of resembles how I found self-direction as I found this opportunity. And I said, I didn't even know this existed. And I went head on into it because I just found so much value in it. It kind of resembled my story with self-direction. So maybe introduce yourself, tell people kind of how you found mineral rights, and then I'll let you share some slides because you've got some good case studies and good information to share.
Absolutely. Well, first of all, let me thank you for having me on. It is a true pleasure to be associated with Directed IRA. And Nate, you and I have known each other for a while now. I consider you a good friend, and I really, really enjoyed our time, over the last couple of weeks where we got together. I am an investor in oil and gas. I was introduced to Eckert Enterprises about 5 years ago. I had a construction business back in Atlanta, and one of the things that we did was life safety, and we did fire alarm and that kind of thing. And one of our customers was Amazon. So over the last 20 years, our company has been installing fire alarms in Amazon warehouses, and that's where I was able to generate my net worth that allowed me to be an accredited investor. Now, as an accredited investor, that it gives me opportunities to invest in those assets that you just talked about so eloquently that you can have in your self-directed IRA. Now, come along about 5 years ago when the world kind of shut down and everything was happening with COVID. I was sitting at home and got a call from a company called Eckert Enterprises. All right, so being a contractor, I had to answer all my phones because I have all my vendors and all my employees. Even though the world had shut down at that time, we were still doing all of our projects. So I got this call, and they introduced me to something in the oil and gas asset class called mineral rights. Well, of course, my first questions were, how did you get my name? How did you get my number? And what is it that you're trying to introduce to me? Now, the great thing about that is just a few weeks earlier, I was doing a review of a commercial real estate course where one of my mentors were actually talking about oil and gas assets that he had invested in. So I entertained that aspect and that call because of the review of that oil and gas asset from one of my mentors. I got introduced to that. I fell in love with the asset class of oil and gas. I've been a business owner and a real estate investor for almost 30 years now. Really, really enjoyed being a real estate investor, having cash flowing properties, being in that landlord tenant relationship, and built my net worth over that. Now, over the years, as I got introduced to Eckert Enterprises and what they brought to me as an asset class, they brought, of course, the oil and gas assets, and then the mineral rights. Now, I'd like to share my screen, and we can go into a little bit more of the opportunities that we have inside the oil and gas
Awesome.
industry.
And I just want to remind everybody, as you guys have questions, make sure you just type those questions into the Q&A box. Ashley will relay them if they're for me or if they're Chris. But Chris, take it away.
Okay, fantastic. Well, we're going to be going through a lot of information, and it's really not that complicated. It's quite simple. Anytime that you're investing in any type of asset class, it really comes down to the point of who you're investing with. All right. And I just want to make sure everybody can see my screen
Yep,
as that we're there. All right.
we're good.
Fantastic. That means I've done a good job. All right. I'd like to introduce Eckert Enterprises. Eckert Enterprises is a family-owned oil and gas company where we specialize in mineral rights, working interest, and other aspects inside of the oil and gas industry. All right. Now, who leads that company? Troy Eckert. Troy Eckert has been involved in the oil and gas industry for nearly 40 years. He started investing his own money back in 1985. He has actually owned his own brokerage. He's been a driller of oil and gas, being an actual operator. And in about 7 to 8 years ago, he started to look at where he was in his investment career, in his business career, and he said, okay, what is the opportunity that presents itself inside the oil and gas industry today? And that's when oil and gas mineral rights came into focus for us as an asset class. Now, over the years, what's the advantage of a company? It's the expertise, it's the who, how many, what has been available through the experience of Troy Eckert over the years is how to build a team, how to get the best available talent that is out there and create an opportunity for him and his investors to have the best expertise backing up the investments. And that's what we've been able to do over the last several years. In the industry over the last several years, there's been a big merger and acquisition phase. Now, you've got these big multi-billion-dollar companies that have gone out there and merged together. Exxon just spent $60 billion buying out another operator in the Permian Basin. And they did that, and when they absorbed that company, they pick and choose all the different assets that that company has. And then, of course, unfortunately, sometimes intellectual assets and skilled assets now get laid off. Now, Eckerd now has an opportunity to go out there and get the very best assets as far as individuals, geologists, petroengineers, accounting, landmen, and assemble that team that now helps us in the oil and gas industry.
Can I add something, Chris? I just want to add one thing.
Sure.
Eckerd has a phenomenal team, but I want to say something about Troy specifically. I attended an investor meetup in California many months ago, and I walked in thinking, oh, it's maybe somebody from Eckerd that's kind of presenting and maybe sharing some investment opportunities. I was completely wrong. I walked in and it was primarily active Eckerd investors that were coming to learn about more opportunities. They had already had investments. They wanted to know what are the next investments, and they kind of wanted updates on current investments. But the person at the front of the room was Troy Eckerd. I mean, he was traveling across the country, meeting with all the investors and actually answering questions. And it was like he knew about every single project like the back of his hand. So he knew the status of all of them. And I learned so much just in that. But I just want to, show you what kind of person Troy is. I mean, he gets on the road even today and meets with individual investors, where I don't know that you get that type of experience with like an Exxon or a big, corporate company like that.
Absolutely. And that's been one of my privileges by being an investor. This year, we actually celebrated, my wife and I celebrated our 50th investment with Eckerd. We have
Wow,
42
congratulations.
we have 42 of the mineral rights packages. We also have 6 of the working interest opportunities that Eckerd has also have in their asset class. And we've also participated in our midstream and other assets that. So it's been an absolute joy to be able to be mentored, get to know Troy as a person, as a friend, where I actually when he I told him that I was going to actually retire from my construction company. That gave me the opportunity to now say, Troy says, "Hey, what are you going to do with with your life?" And I started thinking about it, and he asked me what I was passionate about, and I told him I was very, very passionate about Eckerd Enterprises and the oil and gas assets that they offer. So Troy and I said, "Hey, we'll work it out." And that gave me he offered me the position to come down here. In 2 weeks, I had everything wrapped up and I jumped at the opportunity because it's the asset class offers us as accredited investors such amazing opportunities. Now, up on the screen, I've got the 5 pillars of Eckert's energy strategy. And of course, we can go through those: mineral rights, ownership, leasehold interest, working participation, and then midstream assets. But what's the fifth? The fifth is the team and us as individuals bringing together to make sure that we have such a great opportunity, not only from the asset class, but together we are so much stronger as an investment community than if we were separate. And that's what's so great about, with Directed IRA, you have all these investors that have come together to learn about asset classes, and we appreciate you, showing us those opportunities and having me on today.
Always a pleasure.
Yeah. So now let's go into the mineral rights, what we've really been talking about and what I really have a really strong love for in mineral rights. Because as I told you, I was that real estate investor and I was a landlord and I loved that tenant landlord relationship. All right. So what are mineral rights? So mineral rights are the legal right of an individual to exploit, mine, or harvest and produce the minerals that are beneath a property. It can be leased to an oil and gas company operator. You can do that, and mineral rights for that lease actually receive a monthly royalty percentage. Now, what does that give to us? I told you about that landlord relationship. I'm the landlord, and when I buy a mineral right, I lease the rights to that to extract those minerals to a multi-billion-dollar company. So I went from residential real estate where I was my tenants were individuals to really a commercial real estate experience where now my tenant is a multi-billion-dollar company. I have Exxon, Continental, Devon, all the big majors as my tenants that are paying me a monthly income to go out and extract and harvest those minerals that I contractually own and have control over. So one of the things that I like to really equate to mineral rights is it's buying a multi-level structure underneath the ground. All right. Now, as you see that, from the first shovel underneath the ground all the way to the center of the earth, the U.S. gives us that ability to own those minerals, to control that. So every mineral, it's not just oil and gas. It could be gold, it could be copper, it could be lithium, it could be any of the assets underneath there. We concentrate on oil and gas. Now, what does mineral rights do for us? It's a cash flowing asset. Under each square mile of minerals inside the basins in the United States that we'll talk about, and that's the Anadarko Basin in Oklahoma, and then the Permian Basin in Texas. They're somewhere estimated by the U.S. Geological Society to be somewhere between 25 million to 100 million barrels of oil in the ground for every square mile. Now, as a mineral rights owner, I need to have my foot inside that square mile. I get cash flow for the next 50 to 100 years because there's so much oil and gas in the ground. The mineral rights, the drilling companies have the legal obligation to pay me first. So I'm above bankruptcy. I'm above any type of liability, and I'm in first lien position. As a mineral rights owner, my investment is in buying that mineral right. So as the operators go in and start to drill and exploit that, I don't have any expenses after that. All that is now transferred to the operator. I have zero capital calls. I own the mineral rights and the land in perpetuity. I have zero holding cost and zero liabilities. And like I said, the upside is decades and decades of billions of dollars of recoverable reserves that are in the ground that get harvested on my behalf. Now, I know I've thrown a lot of information to you guys out there, so I want to take the opportunity. If you have any questions.
Yeah, Ashley, do we have any questions? And I just want to state something too. This is what kind of intrigued me about mineral rights is first, I didn't know that it was actually considered a real estate investment. It's actually a real estate investment. It cash flows, but like you said, you don't have all the normal expenses you would expect from real estate. There's no property tax on the minerals. There's no insurance. It's just the cash flow play. And again, I learned something new now that it supersedes bankruptcy and all that because you have the right to get paid first. Ashley, do we have any questions for Chris?
Yes, we do. One sec.
Okay, this is the best part.
Yeah. Chris likes it interactive,
Okay.
so you guys keep your questions coming.
Well, let's start with this one. What are the biggest risks of investing in this asset class, and what is the average break-even price per barrel?
So the biggest risk investing in mineral rights is timing. It's not if they're going to find oil. All the oil and gas is down there. It's the timing of when an operator is going to come in and drill that property. And that's one of the aspects of the expertise of Eckert Enterprises is the fact that we have all of our landmen and our petroleum engineers and where we invest in the tier one assets of each one of those basins. And we also invest where there are multiple pay layers, because this is what you want to be. You want to have multiple zones of opportunity. Number two is you always want to invest where there is an existing well. What that does is give our engineers the ability to now extract what the expected reserves are in the ground and what the cash flow could possibly be in that time. So really the risk of mineral rights, it's not if there's a product, it's not if there's any other thing, there's no liability or extra expenses that we talked about. It's really about timing.
Can I add something too, and correct me if I'm wrong. From my understanding, mineral rights, I guess maybe decades ago, there was a little bit more added risk, but the technology today with drilling has almost made a lot of that risk go away. One of the things I heard Troy mention, and I just, this blew my mind is, back in the day, you would put a drill, in a place, and if you didn't hit much or you didn't hit anything, you got to take the drill down, you got to reassemble it somewhere else. Now they have drills that walk. Is this correct? Where if it doesn't hit what you need it to hit, the drill will pick itself up and walk and put itself right back down?
So you're talking about the new rigs that they have. And I'm going to tell you, I actually take our partners up on a day trip up to go see the rigs drilling on some of our mineral rights and get to really immerse the investor into that opportunity and see that kind of thing. So it's really not if they miss. So what you're really talking about, the risk that people think about oil and gas is about, the old technology of vertical wells.
Right.
You can imagine having to drill a well 10,000 feet into the ground. You're trying to hit this pool of reserves and, you go off by a variance of 2 feet or 2 degrees and you totally miss the reserve. And then all of a sudden they say, okay, you got a dry hole and your minerals now say are worthless. The advent about 15 years ago is the advent of horizontal drilling, and I'd like to go into that. Now you see the pay layers that we talk about there underneath that. What we see, you got multiple pay layers coming in, and we continue to exploit these pay layers as operators. Now, this is the rig coming in on site and says, okay, Mr. Mineral Rights owner, we would like to go in and drill or harvest those minerals that you control. Now the advent was horizontal drilling. So what they do now is they drill down somewhere between 9, 10, 12,000 feet. They turn the bit 90 degrees and they start drilling into that pay layer that you see there, that now that's a maximum exposure to the oil and gas that is now in the thing. So I'm not trying to put a 8-inch thing on a plate down
Right.
10,000 feet. Now I have all of this exposure to a basin for up to 3 to 4 miles. In the last couple of
Wow.
years, these operators now are drilling in basins and going 3 to 4 miles horizontally and exposing that wellbore bit to millions, millions and millions and millions of barrels of oil and gas. And through the advent of hydraulic fracking, they go down there and they bust up that rock. They give the oil and gas an opportunity now to come up through that wellbore and then harvest that oil and
So
gas.
it's not so much about whether or not you're going to hit something. You're going to hit something. It just matters, is it going to be a 1 or a 10? But we're going to hit
Exactly.
something. Yeah.
It's gone from, how much are we going to be, are we going to hit the reserve? Are we going to have a income producing well? Now it's gone to how much of the reserve are we going to harvest and how much money are we going to make? All right. So a little bit of the attributes that we talked about in the mineral rights. It's real property. The IRS actually goes in and says,
Oh, Chris,
consider.
can you go ahead and share your screen on your end? We're not seeing the slides. Just go ahead
Oh,
and
I didn't see.
reshare.
All right. Are we back onto the share?
Angel, give us 1 sec.
All right.
No, we're not seeing it yet.
All right. Let me see. See, this is the technology age of where we're at.
No, it's okay. Ashley, do we have any other questions while he's pulling up the slides?
Yeah, we have plenty.
Okay.
Okay, we there now?
Yeah, your slides
Do
are
you
there.
want to answer one question or
Yeah,
do you
let's
want
take
to?
one more
Sure, let's
question.
do
Let's
that.
take one more question. We'll just leave the slides up. Go ahead.
Sure.
Okay. Since an IRA investment doesn't benefit from the tax deductions, what's the best form/type of investment in mineral rights? Time horizon of 5 to 10 years.
Yeah, I'll let Chris take this, but I do want to mention, from my understanding, Chris, there are some mineral rights investments that fit best inside of an IRA, and then there are some that fit best outside. And maybe the best outside ones are the working interest investments, and then you put other investments, in a self-directed IRA where you're not worried about getting any deductions. Is that did I
Sure.
hit that?
Yeah. Well, let's talk about that. What belongs in a self-directed IRA? All right. People that have self-directed IRAs invest hard-earned income into that at a tax advantage position. So you invest in your IRA, you generate net worth. Now, what actually belongs inside that IRA as an asset? Number one, nothing that loses money. Okay. So mineral rights is considered real property. All right. You have that zero expenses that I talk about. You have millions and millions of oil and gas reserves where you're paid on every molecule of oil and gas in the ground. You have income for as a mineral rights owner, you're paid first and you have no liability. So one of the aspects that I'd like to really talk about is, of course, we get the opportunity to now look at the basins. All right, where do we concentrate? We have this saying here at Eckert Enterprises, follow the rigs. Okay. 75% of the rigs in the United States are in the Anadarko and Permian basins. It's not that hard to go, okay, where do we want to invest? Number one, we want to invest in oil and gas friendly states. All right. Texas and Oklahoma have actually told the federal government, hands off of our natural resources. We're going to exploit our oil and gas resources. That's also where they make a lot of the state income. Now, let's talk. This is an illustration of how we were talking about, the mineral rights and where today's technology and how the horizontal drilling, you can kind of see that horizontal well is fracked in those periodic intervals to where you get such a exposure to the oil and gas. Now, as a mineral rights holder, what do I want? I want multiple wells put in on my oil and gas. And what we're picturing here is those pay layers and how over a period of time, those oil and gas producers will come in and add in a certain layer wells. You'll get the production from all of that. 2 or 3 years later, they come in and they put more wells in the next pay zone that we were talking about. Now we come back and look at it and they put more wells. So that's what I'm talking about, the perpetuity of income and having that opportunity to those millions and millions of barrels of oil underneath your property that you own. And I'd like to take this opportunity now. If anybody has any questions, I can certainly entertain that also.
Yeah, actually, just chime in if you got any questions for Chris or questions for me. I do want to go back a little bit just to that question though. Is I agree 100% with what Chris said. With your retirement account, you don't want to lose money. I love the fact that alternative investments offer cash flow opportunities, whether that's a rental property, a private loan where a borrower is paying interest payments, or royalty income, right? You want your IRA to grow, and sometimes on a monthly, quarterly basis. I think that we sometimes get stuck in the box, and a lot of times it's from our CPAs that try to talk people out of investing in things like real estate because they say, why would you buy real estate in an IRA when you don't get depreciation? Well, why do you need depreciation in the first place for the most part? You're trying to offset taxes as an individual. In an IRA, it's not a taxpayer. So you don't need depreciation. You just need an asset that's going to perform better than what the stock market is providing. And to me, most stock market assets, it's buy low and hope it goes higher, but there's not a whole lot of cash flow opportunity. There's dividend opportunities, obviously. But I mean, real estate's one of the greatest cash flow opportunities, and mineral rights is just another version of that. So I don't think people should get stuck in the box of thinking, well, I don't get depreciation, so it's not a good investment. No, depreciation is not needed in an IRA, but it's awesome outside of an IRA if you need it. So again, when you're an investor, you should be thinking about investing outside of an IRA and inside of an IRA. But if you have money in a retirement account, it has to be invested. That's the whole purpose of it. So it goes back to what Chris was saying is find investments that don't lose value, find investments that cash flow, and find investments that are tangible.
Absolutely. So let's think about that as real estate. You talk about mineral rights or real estate and what it gives us. So basically, I own a multi-story building underneath the ground. I have a tenant that is actually coming in and developing the doors that I get paid on. I have zero expense for that. What a great investment. Not only does my tenant pay me an income, but they go and develop the property for me.
Yeah, it's amazing.
Yeah. And the IRS treats it, and this is what's so great about having it inside a self-directed IRA. Number one, like you said, you don't have any losses. You want things that make cash flow inside of that. But the IRS also treats it as real estate. So there's no depreciation inside of that. So you have capital preservation inside your self-directed IRA.
Nate, and if you want to answer, sorry, Chris.
No, go ahead.
What type of valuation of mineral interest has to be performed for the IRA custodian and at what frequency?
So, I think Chris has some slides on this that I don't want to take away from the value of it, but we're going to talk a little bit about Roth conversions in mineral rights. But I think what the question is just in general, what are the valuations that a self-directed IRA company requires? So we only require one valuation, and it's an annual valuation. Any asset that we hold, you got to think about it. We own things like real estate, notes, mineral rights packages. These are not, there's no readily assessed value for the IRS to say, Bob's IRA is worth this when it's with directed IRA. It's very easy to know what the value of your IRA and what's in it when it's at Fidelity or Charles Schwab. So back in 2015 is really when the IRS really started getting on self-directed IRA companies to say, hey guys, we don't know what you hold, but we'd like to know what you hold. So ever since then, what we do is we require our clients to provide us what's called a fair market value, and it's once a year. All you do is you can self-certify your assets. You can go online, you can go in your client portal, right? You fill out our fair market value form, and you just tell us what the value is. Most clients, their value might not change. You know, if there's a significant change, we have a process for, you know, showing that it maybe gone down in value if you got an asset that's a bad asset. But those are the only things that we require as a custodian, is just to turn in what's called the fair market value. And we send notifications to do that. Again, once a year, no big deal.
Yeah, it's very easy, and
Mhm.
Eckert actually helps out with that with our investing partner. So it's
Right.
really an easy process.
Right, exactly. And if you've got good investment sponsors, a lot of times the investment sponsors will help provide the valuation. You just got to fill out the form as the client. Again,
Yes.
takes you about 5 minutes to do.
Yeah. Any questions that we have from our audience about, what the mineral rights offer to us as real estate owners? And like I said, it's almost the ultimate triple net lease inside of commercial real estate.
Yeah. Ash, any other questions before we move on?
I think we're good for now.
Okay,
Okay.
cool.
All right. Well,
Rock and roll.
we'll move on. All right. Now, here I'm just doing a little illustration of the pay layers that we have available inside of our mineral rights. All right. Each one of these pay layers is that floor that we're talking about, that now the oil and gas company will come in and drill additional wells, producing more income and greater value for us year after year after year. Matter of fact, I have one mineral rights package that is now 5 years old, and it's been producing income for the last 5 years. Today, almost 32% of the package has gotten activation with additional wells coming online. When I invested in that mineral rights package back 5 years ago, for a 10% return, the underwriting was based on $35 a barrel of oil. Today, I'm selling oil off those mineral rights for $65 a barrel of oil. So you can see the value now is that I have created, that now the operators are coming in and harvesting my minerals, and I've had a double in commodity price based on the metrics of what I bought the investment off of. So it's really the oil and gas being traded at a different level has raised my rent rate.
Chris, what's the average time frame that one of these drills will spit off income, for example? Is there like an average duration? Does it stop at some point? I mean, you said 5 years, and I know Troy said he had some packages that were paying for many years. But what can you kind of give us some information on that?
These wells have a economic life for somewhere between 25 to 50 years.
Wow.
All right. And that's just if you don't take any type of technological advances that happen. Now, what's going on inside the industry today is, because oil and gas is a finite resource, but there's still, inside these pay layers, this is going to amaze you. Only about 8% of the minerals and the oil and gas is harvested. So the companies today are taking technological advances and saying, we're leaving millions of barrels of oil in the ground, that we have the opportunity now to go back and, with our technology, re-stimulate the reservoir, and off of wells that we've already drilled, actually produce more oil and gas. So that's another upside for us as mineral rights owners, as the operator develops these technologies to go and increase production, which just means we get paid an extra more royalties on.
That's amazing.
Yeah. Now, let me talk about the timeline. A few years ago, in 2010 and before, let's go even further back. These shale basins that we're talking about, where the oil and gas is now, we're doing the horizontal drilling, we're doing the horizontal fracturing, they weren't even considered economically viable 20 years ago. So then we had that advent of that horizontal drilling that I was talking about, that go in there and we have the fracturing, you get all the stimulation. In 2010, think about if I were to own one of these green sections as a mineral rights owner, equate that to possibly owning in downtown Dallas before Dallas they started developing Dallas. So in 2010, you can see there's some activation going in there. Where do we want to invest as mineral rights? We want to invest in that tenderloin that you see there on the screen. That's where we want to. That's where the Anadarko Basin is, the tier one assets. And then let's say 5 years later, how do we know they're going to produce this income? Look at the activation. This is what it's all about as a mineral rights owner. It's about those oil companies going in there. They know where all the oil and gas is, but it's about going there and drilling that asset and producing oil and gas for us as mineral rights owners, where we get passive income with no exposure to liability or expenses for 25 to 50 years. Then on top of that, they're going to come back in and look at technological advances to go out and get more of the reservoir out, because we still own millions and millions and millions of barrels of oil in the ground. It's really a fascinating asset class. I hope you can hear the passion that I have about it in my voice, because it's really done an amazing thing. Now, like I said, I was a real estate investor, and as real estate investors individually, we are liable for all the expenses and other aspects of real estate. So there's this constant fluctuation of I've got my income. Oh, I've got expenses. I've got my income. I've got expenses. Mineral rights for me now, because I have an opportunity to have that passive income coming to me every month without those peaks and valleys, gives me an opportunity now to have a very broad horizon of passive income that I can rely on month after month. So this is just a little from the oil and gas operator, the reporter that we have in our U.S. Geological division here in the United States. And think about that. Oh, 20% of the Anadarko Stack sweet spot locations have been drilled or developed. The play is still in its early stages of development. So we can expect to see 4,000 to 5,000 more horizontal wells being drilled on our assets. All right. Now, one of the ways that we get paid, and this is really, we saw those little green dots that we were talking about on the screen. I have to, as a mineral rights owner, have to have a footprint, inside of those tracks. And in that, I get the opportunity and my pro rata share of every molecule of oil and gas that gets harvested by those operators. All right. This is one of our older packages that we have. And you can kind of see the development there of that tenderloin that I was talking about. And then going in and investing into certain tracks, being very diversified over those tracks, and how we want to be exposed to that asset class. All right. Now, one of the other aspects, we don't want to lose any money. This is why it's so great inside a self-directed IRA. We only want to acquire proven cash flowing minerals from day one. All right. We only want to invest in minerals that are tier one assets. We want to acquire minerals that have future potential, those multiple zones of activation and development that I was talking about, so that it's an asset that has a tremendous horizon of income into the future. We acquire mineral rights that have a 10% cash on cash return annually over a 5-year average. But on top of that, it's about the underwriting being very, very conservative. All right. We also seek all these minerals in pro oil and gas states, and that's the opportunities that we're having. Now, I'd like to talk about different ways that we invest into mineral rights. Of course, we can do it in individual. We can do it in a trust. We can do it with a 1031 exchange. It's considered real property, so we can actually invest in minerals with a 1031 exchange out of investment property into minerals. But the biggest aspect of it and the great advantage of it is inside that retirement account. Now, I'd like to take an opportunity now about that Roth conversion. And if you'd like to ask any questions on that, this is the really great opportunity that people that invest with directed IRA have these traditional IRA accounts, and what now is the opportunity that you have in the future with this.
And before you get into that, let me just give a little bit of foundation to Roth conversions. A lot of people understand them, but I still get a lot of questions from people about, what is a Roth conversion? Most people who have a retirement account have what's called a pre-taxed account, meaning it's from an old 401k at a job that you worked at. It's an old 403b. You were putting money into that plan. You were getting a tax deduction at the end of the year. Your employer might have been matching. They were also getting a tax deduction. So it's just a big bucket of money in a retirement plan that has not been taxed yet. One of the greatest wealth building tools is to take those traditional IRAs, pay the taxes on where they're at now, either on a portion of your traditional or the entire thing. It's completely up to you. But pay the taxes today before it gets any bigger. Because here's I guess the thing that I was conditioned to think, and again, this is where I see so much value in these types of webinars, is I was always conditioned to think that, oh, you want to put money in a retirement account and get tax deductions and defer your tax to the future when you're in retirement. Well, first of all, I don't want to live poor in retirement. I want to have high income from my distributions from my retirement plan. I don't want to live more meagerly in retirement. That's when you're supposed to celebrate life in my mind. But at the same time, again, I was always a numbers guy. The math never mathed to me because I thought if I put money in a traditional pre-tax account, and let's say I start with $100,000 of contributions and I grow that retirement account to $1 million, that's now $1 million I have to pay taxes on. I don't care what tax bracket I'm in. I'm paying more in taxes because it's much, much bigger than where I started it. And I started to realize, oh, the only people that win in that scenario is the IRS. They just get more tax dollars out of me. But then I also see the problems with traditional IRAs. No offense to people who have traditionals, but I see it when people get to that ripe old age of 73, where the IRS starts knocking on your door and says, hey, remember that traditional IRA? We let you get all those tax deductions. You have to force distribute some of that every single year until you pay us. So the RMD requirements on pre-tax accounts really prevent people from preserving wealth and passing it on to your heirs in a tax-free state. So, and most people think, Roth conversions, I don't want to rip the Band-Aid off. I will tell you, this is one of the rare opportunities where a Roth conversion, if it didn't make sense to you before, might make a whole lot of sense to you now, because we're going to talk about, and it's not really a legal term, but we're going to talk about conversions at a discount, which I think is always something that you should, be intrigued about, especially if you have money in a pre-tax traditional IRA, rollover IRA, or old 401k. So I just want to lay that out there. So go ahead, Chris.
Absolutely. That's the opportunity that we have inside of Roth conversion with the mineral rights, and why it's so attractive to those that have a traditional IRA to get that hard-earned income that you've invested into that IRA and put into that IRA at a tax free implication. Now, taking that hard-earned income and getting it over to a Roth that will never be taxed again on the distributions. You don't have, required minimum distributions. That all goes away. And how to do that at the best possibility in the most tax advantaged way. And that's what's so great about mineral rights. Now, mineral rights, like you were saying in the conversion strategy, we have to get a market appraisal. Okay, so you were talking about the fair market value, and that's what you do. That's what you paid for the asset in mineral rights. To do a Roth conversion, you now get a third party appraisal from somebody, from a petroleum engineer, an engineer that's out there that has the certifications and the experience to go now and give you an appraisal on that mineral right. That now is called a bank appraisal. It's basically what is bankable. Inside of that, you get a lower appraisal because they look at that opportunity by the cash flow that you have. Okay. So when you do that Roth conversion, you get that appraisal somewhere. Sometimes it could be anywhere between 50 to 75% below the fair market value, which now sets your basis. That sets your tax basis for when you transfer that asset over there. So if you can think about it, you have $100,000. It's now bank appraised at about $30,000. That's now your basis when you go over into that Roth Roth conversion. So the tax advantages there, the tax savings are incredible.
Can you talk a little about what are the factors in this bank appraisal that bring in, let's say I invest, $100,000 from my traditional IRA. It's
Mhm.
still $100,000 investment. It's not like my money disappears or goes down, but the bank
Exactly.
appraisal from a third party appraiser comes in and says, well, we don't estimate it to be the 100,000 you invested. We estimate it to be, say, 70,000. But what about that appraisal? What factors are they factoring in to say we think it's this today?
So remember when we talked about in the mineral rights, we're always looking for that investment where we have that existing vintage well. Inside the mineral rights, when you purchase those, there's a lot of assets that are permitted, and then also are called drilled uncompleted wells that are going to be frac stimulated and turn online. So the bank value is actually the cash flows that's being presented by that asset. So they look at that. That cash flow hasn't really accelerated yet. So they take that appraisal based off of the cash flow that's being produced. So if you invest in the asset when the cash flow is maturating, you get to use that lower appraisal now to set your cash basis.
Yeah, just so you understand, guys, this is not change. It's not technically changing the value, but you're getting a
Exactly.
valuation from a third party. And here's our involvement in that as the custodian, right? You can come back to us at any time and tell us, hey, my investment, whether it's real estate, a note, or mineral rights, it's not worth what I paid for it. But for the custodian, we can't just take your word for it. We have to say, well, get us a third party appraisal. Okay. We don't challenge the appraisal as long as it's a third party licensed individual that says, hey, no, it's worth this. That's our job to just take that valuation and change it on our books to, X value. So
Yeah.
in real estate, you get it. You give us an appraisal, right? I bought this house for 100 grand and for some reason it went down to 70. Okay. Well, show us an appraisal and we'll bring the value down on our books to 70,000. So what a lot of clients use that for is they say, okay, if I can show that the valuation is lower than what I bought it for, now is a good opportunity to pay taxes on that lower valuation and convert it to a Roth. In a sense, converting it at a discount. Okay. So with these mineral rights, and I've seen some of these appraisals come in, is these geologists go out there and they have these 3-page appraisals, or I don't know how long most of them are, but they're very detailed in their analysis of it and say, well, we think it's, not worth this today, but it's worth this. But again, you still got that long-term play, that, that 25-year shelf life of the investment. So it is a strategy that should be considered, especially if you're afraid to rip the Band-Aid off, and you got $100,000 traditional IRA. Well, rip it off at 70 then. Invest in something that you can get a valuation for less, and then have that investment, which is still a $100,000 investment, but now we pay taxes at 70, and now everything from that point on is ching, 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 tax-free because we've converted it to a Roth.
Absolutely. And it's really a wealth preservation strategy.
Right.
You're taking something that you worked so hard for, that asset, the money that you worked for, and building your net worth, getting a lower tax appraisal, and then paying a very, very reduced amount of taxes, and then put it into an account that will now never be taxed again. Think about that. What's the number one erosion of our net worth as high net worth individuals? It's taxes.
Taxes. Yep.
Absolutely, 100%. I particularly don't want to pay as much taxes as possible inside of the opportunities that the IRS has given us. That's one thing that's so great. The IRS knows that the United States needs to produce oil and gas. And they give us such great tax advantages, not just with mineral rights, but with working interest also, that allow us as high net worth individuals to now go in and invest in that asset class at very, very tax advantaged opportunities.
Yeah. Well, and if you're also a client that's thinking about passing on more generational wealth to your heirs, right? Passing on an
Absolutely.
inherited Roth IRA is one of the greatest, gifts you can ever give somebody upon your death.
Yeah.
Because inherited Roth IRAs grow tax free for another 10 years to the beneficiary. But, an inherited traditional IRA is great. It also can grow, but you're passing the tax liability to your kids or your grandkids who are probably in their working years, and they end up paying more in taxes than you would have. So, if you're interested in giving more wealth to future generations, the inherited Roth IRA is just one of the greatest gifts on the planet, in my mind.
Absolutely. Absolutely. And the conversion strategy is really quite simple. You have assets evaluated by a third-party appraisal. You get that. You give that to your directed IRA. You give it that. You get the asset transferred from your IRA to your Roth IRA, and
Yep.
you're
Yep.
done.
You just give us the valuation, you fill out a Roth conversion form, and we convert it. It's usually converted by the next day.
Absolutely.
Yeah.
Absolutely.
Now I will say there is a time frame, guys. There is a time frame on when you need to give these valuations to us. Usually, we want the valuation to be dated within 60 to 90 days of the appraisal. So just keep that in mind. You can't go get an appraiser and then 6 years later go, "Hey, I got this appraised 6 years ago." It has to be within a reasonable amount of time, so that if IRS ever looks at it, go, "No, this appraisal was dated 60 days by the time that we appraised it, and here's the third party valuator that appraised it for us."
Yeah. 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 Absolutely. So now you want to talk about some case studies?
Sure, we got time. We're a little bit over, so maybe can you
Okay.
go do one, and then we'll take some questions. And we
Absolutely.
appreciate you
I'll
guys
just put
hanging
yeah,
with us here, guys.
I'll just put it up there right now.
Yep.
Everybody can take a look at some of our existing customers that are and clients that have done the appraisal process and done that Roth conversion. You can see some of those there. We'll look at the ones on the right. There were 4 different mineral rights packages, the purchase price, what the appraised value came in, and then the reduction, the devalued appraisal price to do the conversion. It sets up, that cash basis that you pay those minimal taxes in. You get it in there and you get it into that Roth IRA so that it accumulates income. It compounds because it's cash flowing monthly. And now you've done that and you don't ever have to pay taxes again. No expenses, no liability.
Yeah, that's great. I mean, in my nerdy IRA mind, that's the most powerful thing of this of this whole talk is just the ability to do that, because we always look for the opportunity to pay taxes at the lowest possible rate. But sometimes people just hesitate and they kick that can down the street. This is almost like one of those opportunities that you think of like, okay, now is the time to do this, because the investment opportunity allows me to do that and get a lower valuation. And now I've converted at a lower value, and now I've got a Roth IRA that's growing from that point on. So that's just powerful stuff. This is what the rich and the wealthy have been doing for decades. And now, you have the ability to hear it for the first time.
Absolutely. It comes to us now as accredited investors. These opportunities to grow the net worth and the strategies that are able to be used today is uncomparable in the history of investing.
Ashley, do we have any questions for Chris or I?
Let's see, one sec.
Okay.
Okay.
And Chris, if you don't mind, how do people get in touch with you after this if they're interested? And obviously, guys, we're not endorsing Eckerd. We can't endorse anything, but if they want to get in touch with you, how's the best way to do that?
Well, they can always reach out to me. My phone number, I always give out my personal cell phone number because I, as an
It's going to
investor,
blow up.
have an opportunity. I want to take the opportunity to share the experience that I have, not only with Eckerd in the asset class. So I always allow people, please call me anytime. I love talking about real estate. I love talking about oil and gas, and what this asset class does for us as investors. My phone number is 404-510-1431. And you always email me at kallen, ALLEN, at eckerdenterprises.com. Or you can go to our website, go to eckerdenterprises.com. There's a tremendous, tremendous amount of educational videos, teach you about the oil and gas asset, get introduced to our team, who is Troy Eckerd, who is Eckerd Enterprises, and really study and do your due diligence about the asset class.
I'll say this, you guys got one of the best self-directed IRA pamphlets I've ever seen. I was a little envious on your self-directed IRA pamphlet. So I actually took one for myself and said, God, this is really good. You guys talked about disqualified people, tax advantages, the roles of the custodian. I mean, you guys are really do a lot for the average investor to just not only learn about, Eckerd and mineral rights, but also learn about self-directed IRAs and how they work. So we appreciate you guys for that.
Absolutely. Well, like I was talking about, it's about that team. It's not just, Eckerd's team behind us. Like I said, with the Eckerd advantages, direct ownership into mineral rights, decades of experience. We operate our own wells. The other thing about Eckerd is we invest also in the assets. We have
Right.
a
You guys are
fully
invested
staffed
in
team,
the packages
geologists,
yourselves. Yeah.
landman, engineers, absolutely. Operations team, productions, and then we have that transparency that everybody should be looking for in the alternative asset class. Is, we have our Eckerd app, and you can see that on
Yeah.
that Eckerd
And just a
Enterprise.
reminder, guys, they're our title sponsor at the Alt Asset Summit. So Troy's going to be on stage, and he blew the crowd away last year at the summit. So we're excited to have him and the whole team back again.
Absolutely. Absolutely.
All right. Any last minute comments? Do you have any other slides you want to share, Troy? Or sorry, Chris?
I have one
I'll take
question.
that.
Someone said, can an IRA obtain a non-recourse loan to invest in mineral rights / working interest?
That's a good question. I mean, technically, yes, it could. I don't know any banks that would do it, though. Chris, correct me if I'm wrong. I don't know if there's any lenders that lend to IRA to buy packages, because I don't know what they would base it on, or
I don't have any experience.
Yeah, it's not that it can't. It's just that
Right.
I don't know any banks that would do it. Right? Banks usually just show us a house. Banks are very in the box. Even some of your non-recourse lenders, they just want a house, because here's the thing with banks. Their safety net is the asset. So most banks, they only want to invest, they only want to make loans on real estate, because they know what to do with a 3-bedroom, 2-bath house if they end up, taking it back because the IRA didn't make payments on it. So some of these other alternatives, right? There's just no bank that would do it. It's not that you can't, there's just no bank out there that does it.
Yeah. Yeah, absolutely. Well, I'd like to sum up and some of the proof of concept that we have inside the mineral rights and what Eckerd's been able to do with the revenue generation and the team that we've built. Since 2020, we have acquired. Our goal in 2020 was to own around 2,000 net mineral acres. In 2025, we have now amassed an asset of over 58,000 net mineral acres inside the Anadarko and the Permian Basin. Gross revenue since 2019 to our partners is $156 million out the door to our partners, and growing. So I love the opportunity. If you do want to get in touch with us, you can scan that QR code, or you can also give, like I said, there's my phone number and email address that I gave earlier. I'd love to talk to you about the asset, introduce you to Eckerd Enterprises. We will see all of you guys out there in Scottsdale. I'll be out there also. So I look forward to anybody who come by and, have a conversation. Love to have that opportunity. Look forward to having dinner with you also again, Nate, when we're out there.
Oh, I'm looking forward to it.
Yeah, absolutely.
Awesome. Can you bring up since we're talking about that, Angel, can you bring up my slide real quick? So as a final reminder, guys, is get your tickets to the Alt Asset Summit. If you want to hear more information like this and information on other alternative investment opportunities and strategies, guys, this is the only event that does this in the country. So get your tickets. Use Nate 100. You get $100 off any ticket, even virtual. But I will tell you guys, there's so much more value in being there live. It's an event that people repeatedly come to. So if you haven't been there for the first time, make this year your first time. And I guarantee you'll probably come year after year, because it's a great networking opportunity. You'll meet the Eckerd team. You'll meet Chris. You'll meet Troy. You'll meet Carlton Dennis, Pace Morby, Mark Kohler, Matt Sorensen, myself, the whole Directed IRA staff. So make sure you guys go to altassetsummit.com and get your tickets. So you could drop that slide down. Just bring us both up, Angel. I just want to thank you again, Chris, for taking time out of your busy schedule. I know you travel a lot, just like me. So it was great information. Ashley, any one last great question that we need to answer, or should we just direct them to Chris directly?
Hey, I take the opportunity. Please reach out. I'd love to talk to anybody. If there's any questions that somebody asked that didn't get answered, please reach out to me. I'd love to get the opportunity to talk to you about it and answer that question for you.
Cool. Well, hey, I want to thank everybody for attending too. I know we went a little over, but the information was just so valuable. I didn't want to stop, and I definitely wanted to talk about that Roth conversion opportunity, because that's something that is even new to a lot of us. So thank you, Chris. Thank you, attendees. Make sure that you register for our next webinar. We're going to have another one in 2 weeks, so keep out for the announcements on that. And everybody, I hope you found this valuable, and we'll see you guys next time on another Directed IRA webinar. Thanks again, Chris.
Thank you, sir. Thank you for having me.